I'm recording right now. So welcome to this call. I know it was impromptu, but at least 21 people has made it to the call, which is quite encouraging. Right. So I want to share with us again, which I feel it will be many people's uh, difficulty, what many people might find difficult. I want to talk about higher time frame bias again, right? How I personally frame higher time frame bias in my own personal way, right? Based on what I've actually shared, right? I feel like the second one I'm going to share, I might not have shared it before, but I know I would have shared it before one way or the other without fail. But I want to re-emphasize everything once more. So now, remember, we are always going to start from the weekly time frame down to the daily, down to the 4 hours, right? Down to the 1 hour, right? So I'm using 1 hour as the last resort. The reason I have my reason why I'm using 1 hour. So everything we're going to be doing is going to fall under all of this. So the first thing first we want to talk about is, let's say, how do we do bias with a key level, right? So let's say, for example, on the weekly time frame, we have this V-shaped key level. So let's say we're looking for bias, right? So let's say we have this V-shaped key level. Well, what's wrong with this mouse? So we have a V-shaped key level on a weekly time frame that we intend to buy from, right? So this V-shaped key level is what we intend to buy from on a weekly time frame, right? I've always said it that there are only two criteria that we believe that needs to be met, right, on the weekly time frame. These two criteria needs to be met on the weekly time frame. And the two criteria is that we want to see, number one, a candle rejection and a candle closure, right? Number one, we want to see candle reject from the key V-shaped key level. And number two, we want to see candle close. So now these two criteria being met serves as intel, right? But they're not sufficient enough to tell us that we're going to be bullish all through that week. So the first thing first we want to see is price reaction from the V-shaped key level, right? And price closing above it on the weekly time frame, right? So the moment we have, so let's say, for example, this V-shaped key level was created week one. Let's call this V-shaped key level week one. Let's call this reaction and closure above week two. So let's say we're coming into a new week on a Sunday and we want to look for buying opportunities, right? We can see that the V-shaped key level was rejected, price rejected from the V-shaped key level, closed above it, right? So these two criteria has been met, candle rejection, number two, the candle closure, right? So what we have to do is move one time frame lower. There are two things I believe every single time that the daily should give to us. The first thing we want to see the daily give to us is either daily will give to us a most recent breakout, right? This most recent breakout on the daily, when you move to the 4 hours time frame, a most recent breakout on the daily is a liquidity sweep and a breakout structure on the 4 hours, right? So the moment you have all these criteria met on the weekly reject weekly, close above it with an impulse, it closes above it. The two criteria has been met on the weekly time frame, but that is not sufficient enough to say that we are going to be bullish until we move one time frame lower from the weekly time frame. So when we move from the weekly down to the daily, one of the things we want to see is the daily is most likely going to give to us a most recent breakout. A most recent breakout on the daily when you move to the 4 hours is a liquidity sweep and a break of structure. So what this 4 hours tells us is this break of structure that we have, it tells us automatically that we have an A-shaped key level that got disrespected with an impulsive move. So ideally, contextually, we want to wait for this particular next 4 hour candle that is going to serve as internal range liquidity. We want to see liquidity swept, price come back to this A-shaped key level, continue to move to the upside, right? So if daily doesn't give to you a most recent breakout to the upside, right? Daily is going to give to you what we call a liquidity sweep and a break of structure, right? So you see that the primary purpose why we want to see these two things satisfied on the daily is because we want to ensure that the daily is in alignment with the weekly time frame, right? So the moment we see that the daily has given to us a liquidity sweep, which means for us to be sure that daily is in alignment to the weekly, we're most likely going to see a breakout to the upside, right? And the breakout to the upside on the daily is a liquidity sweep and a breakout structure on the 4 hours. Why on the daily? If you don't see this most recent breakout on the daily, and let's say daily shows you the liquidity sweep and the breakout structure, there is every possibility, a 70 to 80% chance that on the 4 hours you are going to get a breakout. You are going to see all you need to focus on the 4 hours is going to be the most recent breakout to the upside, right? This most recent breakout to the upside on the 4 hours, just as we explained at the daily, the most recent breakout on the 4 hours on the 1 hour is going to be a liquidity sweep and a breakout structure. So what that means for us is that A-shaped key level got disrespected. We'll wait for the next 1 hour candle to serve as internal range liquidity, right? So it makes a whole lot of sense when this key level is overlapping inside of an imbalance. Price will sweep liquidity, come back to that level. We want to see price continue to buy to the upside. This is a simple process on how to be able to understand the directional bias. I've said it over and over and over again. There are only two business every traders have, right? The only business you have is understand directional bias, and number two, understand your entry model, right? You don't need to trade all the entry models. Just find one, stick to it, right? So now this is how you frame bias. Weekly reject weekly, close above, right? So this V-shaped key level was created in week one. This reaction was created in week two. So we are coming into week three, right? Because week three, let's say week three is a new week. And as in preparation of week three, we're looking at the chart on a Sunday. And we saw weekly reject weekly, closed above. We went one time frame lower. We're expecting two things to happen. Either we get a most recent break to the upside, right? And the most recent break to the upside on the daily time frame is a liquidity sweep and a break of structure in the 4 hours. If daily does not give to you a most recent breakout, daily is going to give to you a sweep of liquidity and a break of structure. The moment you see this on the daily sweep of liquidity and a break of structure, go to the 4 hours. What you will see on the 4 hours, you are most likely going to see the most recent breakout on the 4 hours. This most recent breakout on the 4 hours is synonymous to what I explained of how the daily relates to the 4 hours, meaning that this 4 hours most recent breakout, if you move one time frame lower to the 1 hour time frame, it becomes a liquidity sweep and a break of structure. Automatically, you are able to interpret the data that an A-shaped key level was supposed to be used for sales got disrespected, right? That means we expect price to come back to that same A-shaped key level that got disrespected, use it for buys, and price will continue to move to the upside. All of this that we are trying to do is just to ensure that 1 hour is in alignment with the 4 hours, right? 1 hour is in alignment with the 1 hour is in alignment with the 4 hours. 4 hours is in alignment with the daily. Daily is also in alignment with the weekly, right? Because if the weekly is going to be bullish, it means that we are going to have sales that week, but overall, the entire momentum is going to be to the upside. Do you understand what I'm saying? So now, what is the second way to build bias? Yes, that reminds me, somebody, when I did anonymous on my status, right? In fact, I deleted that app like earlier today. I don't just know why. I just saw it and I don't know why I deleted it. So, but somebody made a request on the anonymous app. I think the person is Among Us. The person said he wants us to learn stacking, right? So I don't know if the person has peeped through my Telegram, right? Because I told the Schofield, is Schofield on this call? I told Schofield some two
Yes,
weeks
I'm on the
ago.
call.
I told Schofield some 2 weeks ago that I'm testing out a system on stacking, right? So the thing is that I'm going to say it that I'm not the originator of whatever it is that it comes to stacking. I've been able to relate with a few people like Stargirl. Um, I've not really had enough conversation with Mini, but one of them actually showed me how to stack, right? So in fact, the thought process is a very simple one. You don't have to change anything about SLK, right? The entry model, in fact, the entry model is always on the 15 minutes according to what the person shared with me, right? So personally, I've been testing it out. I still used it on Saturday into Sunday night. It was crazy, right? I used it on BTC Sunday on Sunday middle of the night. I've been testing it for over a week, right? Yeah, so I've been testing it on live account. So I just deposit a very small amount of money. I start like 5 to 6 positions and all of that. So I've been testing it. In fact, the first day I tested it out, I made a very crazy mistake. I lost the entire money, right? But over time, until Sunday, I used it on Sunday and the result was amazing. So I'm going to share it with us. I want to be able to understand it perfectly well. Then I want to share it with Schofield. In fact, what I had in mind initially was that I would just pick I would just so my initial plan was I was just going to pick like 5 to 10 random people. I'll open a special group for that stacking, right? So I will explain the entire thought process to them, right? Then we would use like 2, 3 weeks and work on it, right? Live executions. Then we'll now bring it to the house, right? In fact, that was my entire thought, right? So personally for me, I've been testing it, but I don't want to share what I've not mastered with the house, right? And all of that. But I will explain it here. I'll just give a little hint, right? So let's go back to how to build bias, right? I would also reach out to Stargate maybe before the end of today as well. So give me a minute, please. Yeah. Okay. So yes, Kofi just sent me a message, which is very important. I don't want to share it with anybody yet until I've understood it personally, like perfectly well. There's nothing like perfection, but at least to some level where we know that yes, makes a whole lot of sense. So back to the second thing I want to be able to share with us on how to build bias, the second thought process, right? We just spoke about using key levels. So we have weekly, daily, we have the 4 hours, right? We have the 1 hour, right? Right. So now the second one on how to build bias, right? Let's say, for example, we have this how to build bias with the forms of liquidity. If we all remember, right, I've told us that there are two types of liquidity, right? We have the internal range, then external range, right? And we have forms of liquidity that serves as types of liquidity, meaning the previous daily high, previous daily low, previous weekly high, previous weekly low, previous monthly high, previous monthly low, 4 hour high, 4 hour low. All of these are forms of liquidity that serves as both internal and external range liquidity. So if you remember, that's when we spoke about understanding the types of liquidity. I want to now share with us how you can build bias with it. So look at this now. So let's say, for example, this is week 1, right? We have this particular weekly candle, right? We have this weekly candle, week 1, right? So let's say, for example, we have week 1, this is the previous weekly high, right? And we have this previous weekly low, right? So now we have this first candle as week 1. And let's say, for example, you are unable to tell which. So let's say, for example, you're unable to tell which of the key levels that price is reacting from, but because of your understanding of forms of liquidity, let's say price takes out this particular liquidity like this, the previous weekly high. So don't forget, we are calling this particular candle week 1. This is week 2. So we are currently in week 3. Let's say, for example, we are in week 3. We want to see what the previous weekly candle did. So let's say we swept the previous weekly high, and after sweeping the previous weekly high, we close below. So don't forget, when it comes to the key level, right, there are two criteria that needs to be met on a weekly: candle rejection and candle closure. But when you are building bias from the weekly time frame without using uh, key levels, let's say you're using the forms of liquidity, let's say the previous weekly high, there are two criteria that needs to be met, right? The sweep of liquidity and the closure either above or below that liquidity that was swept, which means that on the weekly time frame, we swept this particular previous weekly high, and after sweeping this particular weekly high, we close below, right? So you can see how we close below. So sorry. So if you look at this, for the key levels, we said two conditions needs to be met: candle rejection and candle closure. When it comes to the subject of using liquidity to frame your buy from the higher time frame, two conditions needs to be met first, right? Sweep of liquidity and closure below that particular liquidity that was swept. The reason why we need to see a candle closure below that particular liquidity is that now there are 3 intels it tells you, right? It gives to you an intel that we are going lower, and meaning if we are going lower, so let's say we are going lower, right? And I've told us that price moves from one point of liquidity to another, which means that price would move from internal range to external range, from external to internal. And for forms of liquidity, price will move from the high to the low. So automatically, this particular low, which is the previous weekly low, is the next ideal liquidity we want to see price run into. So coming into the first week, so this is, like I said, this is going to be week 1. This is also going to be week 2. So let's say on the Sunday for the week 3, we're preparing for the new week, and we see something like this. It tells us that automatically, either week 3 to week 4, we are going to see more sales to the downside until this particular low is taken. So, but the two conditions that needs to be met is, number 1, liquidity sweep of the old weekly high, and price is closing below that high that got swept, right? And for the week 3, we are going to have buying opportunities, right? But that buying opportunity is going to be short term, because overall momentum is going to be to the downside until the previous weekly low is swept, right? In fact, week 3 and week 4 can continue to sweep like that. So you will know what you're expecting. So you can see week 1, previous weekly high, week 2 swept that high, closed below it, right? And week 3, we saw how price started to drop. So when we look at this, the same criteria for the key levels is the same thing. We move one time frame lower after this liquidity sweep, right? And closure below this particular liquidity that was swept on the weekly. We move to the daily and we are looking for the same thing. Nothing has changed. What we are looking for is that if we see daily give to us what we call a most recent breakout to the upside, right? This most recent breakout to the upside, when you move to the 4 hours, is a liquidity sweep and a break of structure. The liquidity sweep and a break of structure now is an indicator that an A-shaped key level got disrespected. So the next 4-hour candle is going to serve as internal range. Price will sweep it, continue to move. But if daily does not give to you a most recent breakout, daily is most likely again going to give to you a sweep and a break. If daily gives to you a sweep and a break, move one time frame lower on the day on the 4 hours, focus on the most recent breakouts that was created on the 4 hours. This 4 hours most recent breakout, when you move one time frame lower to the 1 hour, the most recent breakout on the 4 hours is a liquidity sweep and a break of structure, which means that we would have to wait sometimes for the 1 hour candle to serve as internal range liquidity price to sweep it, continue to move to the upside. Are you seeing how this is a very simple thought process? You know what you're expecting from the weekly, you know what you're expecting from the daily, you know what you want to see from the 4 hours, you know what you want to see from the 1 hour, right? And all of this. So if we look at okay, we're going to look at some peers, right? And you will supreme. So everybody knows, you see why nobody has the ability to tell you that you are wrong or you are right. So if every one of us remember that we're looking for GBP JPY to continue to rally to the upside, even though we were right with our buys from all of this place, right? We started calling the buys from this particular high that broke it and to this point. But the market has a way to tell you that, okay, guy, this buy, at least we're going to have some little bit of retracement, right? See, this is a previous weekly high that got taken, right? And you can see after the previous weekly high got taken, we know where the key level that price came from, right? 2 consecutive candles to the upside created a bullish open close. So we had, so let's look at this first one, right? Weekly rejects a weekly open close, a bullish open close after sweeping liquidity. The bullish open close is also overlapping inside of this imbalance. So what we saw price did was that price rebalance the old imbalance at this bullish open close. You can see how the weekly close. The moment we saw that the weekly close like that, we move one time frame lower, right? And after we move one time frame lower, weekly reject weekly, daily give to us a breakout to the downside. Are you seeing this now? And after daily give to us a breakout to the downside, we had a little bit of retracement. And since then, heavy momentum to the downside, right? The entire momentum has been to the downside. So if we go back to the weekly time frame again, and let's say somebody was finding it difficult to understand that price came from this bullish open close, right? If you pay attention to what I just said, you will see that. So let's tap this particular bullish candle week 1. Let's tap this one week 2. This is week 3. This is week 4, right? Price swept this particular previous weekly high, right? This is week 1. So week 2 swept week 1 big high. And after sweep of that particular high, you can see how we close below. We close below that particular high. When we move one time frame below after that sweep, right? You can see what we did. We swept the previous weekly high here, right? And you can see how we still gave that break of structure. And after the break of structure, we retraced a bit and the entire momentum has been to the downside, right? So, but this says to us here, look at this. Look at this. Week 2 swept week 1 high, which means that the ideal liquidity that needs to go next is going to be this week 1 low, right? Previous weekly high swept. Look at this. Week 3 sold. Can you see how we had a little bit of buys, right? And after the buys, week 4, mute your mic, please. So you can see how week 3 and 4 sold until this previous weekly low was taken. And since then, prices has continued to sell. So week 3, week 4, week 5, week 6, we've seen heavy moves to the downside just by being able to interpret all of this data. That prices week 2 took out week 1 high, closed below it. We moved one time frame lower to the down to the daily, and we saw that after the sweep, the daily gave to us a break of structure, which means that daily is in alignment with the weekly. Let's move to the 4 hours. Let's see if we would find anything on the 4 hours. So daily gave to us a break of structure to the downside, and look at what 4 hours give to us. So 4 hours give to us a break of 2 structural points. We had this higher high, higher low, higher high, higher low, higher high. 2 structural points break. We broke below this first structural point. We broke below the second structural point. Somebody is asking, what does structural point mean? I've said it in the basics of structure already. That when price is bullish, for example, every higher high is an external range liquidity. Every higher low is an internal range liquidity or a structural point. The reason why it's called a structural point is why they call it a break of structure. If price breaks below a structural point, closes below it with a body, right? It means that price has broken below that structural point. Definitely, we're no longer going to be bullish. We're now going to be bearish. I'm going somewhere. So you can see we had 2 structural point break 1. We had this structural point break 2. Price gave to us is some sort of reversals, and you can see how we just continue to move to the downside. So let me spot. I want to spot center. I want to use this for example. Hold on. I want to see if I'll be able to spot I want to spot something. Oh my God. So for example, yeah, I just wanted to use that area to mark out something. So you will see that we are all bearish, right? 4 hours daily and weekly, showing us signs of bearishness. So in this type of case, you will see that your entry is not going to be perfect, but when you have mastered your entry model, it shouldn't become an issue. So you see that this is the type of entry that Scofield will take, right? When you move to the line chart, you can see this is an A-shaped key level that got disrespected twice, right? And price started to drop. Internal range liquidity, A-shaped key level that got disrespected twice, price tapped into it twice. So, but what did you notice here, right? You will notice how, look at this. The same thing. We took out this previous 1 hour high, closed below it, right? After closing below it, you can see what happened here, right? This 1 hour created an A-shaped key level that price tapped into and started to drop. So if we took out this high as internal range, the most ideal external range to take is supposed to be this particular low. And you can see the momentum to the downside until that particular low is taken. I want to investigate this particular 1 hour, right? Let's move on time frame lower to the 30 minutes. You are great, you are kind, you are good. So I made a silly mistake yesterday on GG. I'll share with us. I I was willing to swing all of the sales that is currently happening on GG. I was willing to swing that sales, but my stop loss was very tight. My stop loss was very tight. So it took me out. And when I came back after a few hours to check, I was already taken out. So when you look at what is happening here on, you can see this. Remember when we are coming from on the 1 hour time frame. Are you seeing how no matter how messy all of these data are, right? You have the ability to interpret what is happening. Don't forget, this is a 1 hour key level that price, 1 hour A-shaped key level that got disrespected twice. You can see how price closed below it on the 1 hour time frame. When we move on time frame over to 30 minutes, what would you find? Look at this. Simply, two consecutive candles to the downside created a bearish open close, right? So let's use this bearish open close. You can see one single candle formation is going to serve as internal range liquidity. So what did price come to do? Attack liquidity, right? Came back to this key level, and you can see the massive drop until we took out this particular low, which is the next internal range and external range liquidity. If you look at the same thing that happened here on the 30 minutes, knowing fully well that we are bearish on the weekly time frame, right? You can see what happened here. Two consecutive candles to the downside created this bearish open close. I'm telling you, that is why I say that sometimes when somebody says that, oh, just take one, see, I'm going to show you something, right? I'm not saying you can't take 5 trades a week, 10 trades a month, 10 trades a week. I'm not saying you don't have to be like everybody, but just that patience that comes with, I want to just wait for. I was even thinking today, I was like, personally, I was saying that I wish people just take entries from just 4 hours and 2 hours or 1 hour, right? See the level of patience you would need, right? It's something else, right? And but at the same time, the moment you are able to establish your directional bias, you are just going to be looking for entries in that direction. You're not doing anything much. So when you look to the 30 minutes, you can see two consecutive candles to the downside, bearish open close that was used one, two, price came back to use it again. But we're paying attention to what price is doing here. And you can see all of this A-shaped key level that got created, single candle formation being used as internal range liquidity. Right? Price took that out, and our next external range liquidity that price came to take was this low. See the momentum to the downside. And after that liquidity was taken, right, we can actually see what price did here, right? This was an A-shaped key level, right, that sponsored all of these buys to the upside. That same A-shaped key level that sponsored, V-shaped key level that sponsored all of those buys, sponsored also these buys to the upside, right? So if you notice what price did here, got disrespected, right? After it got disrespected, look at this on the 30 minutes, right? If this was a snipe, for some people, it will not tag them because of their broker. Now, if it didn't tag you because of your broker, did you see how we repeated something here? Single candle formation serving as internal range liquidity above a key level. Single candle formation standing above an A-shaped key level. What did you notice here again? We had a break of structure because when you move to the line chart, you can spot the break of structure already. Higher high, higher low, higher break structure, right? And after we broke structure, single candle formation is going to serve as internal range liquidity. Yeah. For somebody like me, this would have been a loss to me because this would have been where I would have played my entry from, right? And my stop loss is always going to be somewhere around here. except my intuition tells me to just put it above this high. I will put it above this particular high. But in most cases, right, I'm going to put it above somewhere like this. Except my intuition just tells me, guy, give this thing more time to breathe. I'll put it here. But let's say, for example, I follow my intuition and I put my stop loss at just above this high. You can see the same thing has been repeated. Single candle formation serving as internal range, internal range, internal range. And the drop was massive, right? So what did you notice here again? You can see this A-shaped key level that got disrespected, overlapping inside of an imbalance, right? And overall, we could see that internal range liquidity was swept, rebalancing of an imbalance, and the drop just continued. So if you look at what's, if because we are bearish, we have been on GGO, I still want to talk about GU. I hope we are learning, right? Yes, Ace for H1. See this thing as Kofi said, I promise you, being very honest, I was meditating, not like meditating. I just thought of it randomly that I wish people just take trades from just 4 hours and 2 hours alone. I'm telling you, I'm not saying you won't take losses, but your losses would reduce like crazy. Your losses is going to reduce, right? So if you look at what I was showing somebody earlier today in the morning about GG, I said, because of what the weekly is showing to us that we are bearish, you can see this false breakout, right? Lower, low, lower, high. This is our most recent breakout. The price gave to us a false breakout, but for us, there's no point for us calling it a false breakout. We know that we are bearish from the weekly, so we know this is what 4 came to do. 4 came to sweep this particular high, right? Let me investigate this. So we swept this previous 4 high, played out from I think there's this open close key level here. So let's say we move on time from lower. I want to see something. Okay, nothing so interesting there, right? I'm trying to look for something. So I was trying to explain to the person, I said, see why this, it's just imagine on the 4 hours alone, right? So we rebalance this old imbalance, swept this particular liquidity, right? So if you pay attention to this, our most recent breakout is to the downside, right? All of this breakout is just a retracement. Why? Because we already took out this external range liquidity. After we took out this external range liquidity, we expected some level of reversal. So we are not really moved about all of this breakout. So, but the major question is, where do we focus on, right? A-shaped key level got disrespected, right? Once to the upside, second to the downside. Second level again is this, right? V-shaped key level got disrespected, 1, 2, 3. And that is where price came back to that. And the moment price came back to that level, you can see how we continue to drop and we never looked back, right? So this is one of the mistakes I made yesterday. I didn't even know until later when I checked. I figured out that it took me out already. So my stop loss was very tight. It was exactly at this particular point. So it took my stop loss out and started. In fact, I was willing to hold this guy till whenever, right? So, but when you look at this, it's just simple. I made a tweet. I said, just focus on the most recent breakout on the 4 hours. But I didn't give complete context to the tweet, right? When you understand the bias, focus on the most recent breakout of the 4 hours. The most recent breakout on this GG on the 4 hours is to the downside. You can see how we broke out to the downside. The next thing you can see is move to the line chart. When you move to the line chart, what would you see? A-shaped key level that got disrespected twice, right? And what did you see price did? Got disrespected once. Look at this. Price came back to that particular level and it has been a healthy drop since then. Everybody remembers when Dixon was saying that a week on the higher time frame can serve as a key level on the lower time frame. So you look at this again, single candle formation serving as internal range liquidity, swept, price came to rebalance this old imbalance. All of this happened in the middle of the night. So we swept liquidity, rebalance and old imbalance at this particular level. And we started to drop. You know what? We have less than 1 minute, right? Anybody who still wishes to join, I will send another link now. So this one can start converting. See you in the next link.